you're paying $1,487 in interest, and only $783 is actually going towards the loan. So I want to show you what investing at $10 a day can possibly do to your mortgage when it comes to paying extra on your principal. Now, we're going to obviously be going through this, and we're going to go with some basic numbers. Your numbers might be different, so just something to keep in mind as we go step by step on this. You can obviously go to different websites to plug this information in. We're actually on the Ramsey Solution website. So Dave Ramsey has this page where you can actually type in some information for your mortgage and see how much extra you can pay off. Now, let's go ahead and start with some easy examples. So we're going to go, or an example, I should say. So we're going to go with $400,000 loan here. And we're going to say that the first payment starts on January 1st, 2023. And we're going to have a 30-year loan. That's typical for most people. Now, the interest rate, obviously, as of this recording, is fairly high for a lot of people. We're going to go with the example of 5.5. So yours might be higher, yours might be lower. But again, these are just examples, and you can plug in your own information as well. So you can see here that the current mortgage the current monthly payment for the principal and interest is, give or take, about $2,271.16. Now, what we're going to do is go ahead and click on continue. And this is going to bring us to this next page right over here that actually gives us the opportunity to see how much we're going to be paying in total for this loan. Now, you can see right over here on this loan, over here on the right, you're going to see the original amount that you're going to be paying when it comes to this loan in its entirety over the next 30 years. So if you don't pay anything extra on this loan for this example, you're going to be paying a total of $817,613.96, give or take, with, of course, the original amount that you took out was the $400,000. So you're going to be paying quite a bit of interest. You can see there, I just highlighted under, you're going to be paying interest of around $417,613. Now, obviously, this is the course of over 30 years, but what some people don't tell you too is that you are going to be paying a lot of that interest on the front end, because that's how amortization works. You're going to be paying on the front end, where towards the end of the 30 years, you're going to be paying mostly just on the principal. Now, obviously, with our example, your end date is going to be December 2052. So that's 30 years in total. Okay, so we talked about doing $10 every single day. Now, one thing to note when it comes to paying extra on your mortgage, whether you pay it on, that extra $10 every single day, or you accumulate it together and pay it all at once at the end of the month before the new month begins, you're not going to be paying anything different. Unlike student loans where they accumulate interest daily, the mortgage only charges you the interest once the next month starts. So for our example here today, we're going to be doing $10 a day, which averages out to $300 every single month. Obviously, some months will be a little bit higher, and then February would be a little lower if you just go based off of $10 a month, right? So we're going to do $10 a day. So we're going to do $300 as our extra payment. And of course, we're going to do paying this monthly. You could do obviously quarterly, yearly, or one time, but we're doing monthly. And we're going to say that we're starting this on the same day that we start our new loan. Now, if you've already been paying on your mortgage and then you just start, obviously it's going to be a little bit different for you, but nonetheless, it's still going to have an impact for you. So we want to go ahead and click the calculate results. But before we do that, I do want to talk about one little thing really quick. I want to talk about life insurance, because I think life insurance is a really big deal when it comes to protecting your family. And a lot of times people want to pay off their mortgage early to help protect their family from any other financial things that might come up during that time period. So if you have term life insurance and something happens to you during this time, your family is protected and has some money to be able to either pay off that loan or do other things with that money and not have to worry when it comes to, really bad things happening in life where, the main focus should be on family and not money. I'm a huge fan of term life insurance. Check out the link down in the show notes down below. It takes just a couple minutes to see how much you can qualify for. And honestly, it would be shocking for most people to see how much they can qualify for a little bit of money every single month. Now, of course, that link down below is an affiliate link, which helps support out the channel, but it gives you more free content like this so you can keep on learning and growing with your finances. Okay, so let's go ahead and now click on the calculate results. And this is what we're going to get with our $10 every single day. We are going to be saving over $115,000 over the course of this loan, and you're going to be cutting off 7 years and 2 months of your loan, which is about 24% faster than you would have originally if you were just paying the exact amount every single month. Now, that is a huge amount that you're going to be saving and a huge amount of time that you are saving by putting this extra money towards the principal of your loan. Now, there are some things that I know a lot of people get to when it comes to the comments down below, where some people are like, well, if you take this money and just invest it into the stock market, you can make so much more. Yes, that's true. For the most part, you can actually do that and make typically more money than you would be saving in interest of that $115,000. Now, here's the thing. For some people, investing in the stock market might be a little too risky. It might be really scary. And saving this amount of money with only $300 every single month or $10 a day in their mind, like that can be a much bigger impact in their lives than putting that $10 towards the stock market. Because it's a lot easier to do something where you have a guaranteed savings, especially if your interest rate is like 5.5, 6, or even 7%. You're saving that interest now rather than putting it in investments and potentially getting those gains. And so this is going to be a way for a lot of people to help save money, help save time on their loans. And then if you want to use that extra money down the road to invest, or you can go through the process of investing as well as paying down your loans, all these options are all available for you at the same time. So you can take those options and see which works best for you, of course, but putting that $10 a day can really have an impact. You can see here, you're saving 28% of the interest that you would have otherwise been paying in total. Now, also keeping in mind, like I mentioned earlier, that if you are already started with your loan, you are actually paying the most on your interest early on. And I'll show you with the amortization chart here. So you can see here, so again, our date starts on January 2023. You're paying $1,833 in interest as the loan starts. And then let's go ahead and jump down a couple of years. So let's say, where's the January here? So January 2030, so a couple of years down the road, you're paying $1,487 in interest, and only $783 is actually going towards the loan. And then again, we keep jumping down. Let's say another 5 years, give or take. Where is that? So January 2035. Now it's $1,100 going towards the interest and $1,125 going towards the principal. So you're actually almost break even as far as how much of your loan is going towards interest and principal. And that's getting cut down faster because of that $300 you're putting in every single month. If you weren't putting in that extra $300, this split right here would take a lot longer to get to, which means you're paying more interest earlier than you are if you are putting extra money towards that loan. Now, again, everybody's going to be different, whether you want to use that money to invest or use that money to pay down your loan. All of it can have an impact on you. Either way, I think you're going to be doing much better for yourself by paying attention to these things and managing your money properly. Again, check out the link down below for term life insurance to help protect your family. And next, I actually want you to check out my video right over here to keep on learning and growing. My name is Dennis, and I want to help you in that next video.